The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks so much for kicking off your trading day right here with the Morning Market Kickoff at TFNN. We got 24 minutes to go until the opening bell, and we got higher prices yet again this morning. Blowout earnings from Netflix last night. They add a monumental amount of users. They are going to raise prices in the U.S., and that stock is up 15%. We're pushing $1,000. Why not? Let's jump over to it. And that is quite a move. You were looking at an expected move. We looked at this yesterday in the program. An expected move in either direction, $75, something like that. And you're up right now $130 to the upside, $1,006. You talk about a run, man. You back this thing up from the lows of 164 in 2022, and we hit 1,000 today. And yeah, you look at this chart, right? We talked about it as well, and it was there, man. There's a nice bounce on the channel line. You're talking about breaking out of the channel on Netflix to the upside. We're going to open at $1,000 today, and there's no reason to think, it could give up some of that action. You're up by 15%, but big numbers. We'll get into it in a moment as we come into earnings numbers that are going to drive this market, and we got S&Ps pushing all-time highs right now. Let's put it back to a 15-minute. A daily. And yeah, you had some volume yesterday, right? Check it out, 1.647 million. Beyond that, we had the trickle to negative volume in terms of declining volume on this way up. But yesterday, that was a big day. We got a little bit of a spike in volume. Now we're coming into this bar on December 18th on the S&P. That bar, 2.532 million shares when you traded lower. And we've had an acceleration as of yesterday, and we'll see what happens today. As you got markets higher again, you get the S&Ps up by about 0.5%, up 30 points at 6114. NASDAQ 100 up 205 points, or almost 1%. NASDAQ with a little bit of a volume uptick yesterday as well. Dow 44,382. You're up by 1/3%, or 144 points in the Russell, actually, in the red this morning, down by about 0.2%. Bitcoin pulling back from that high of 110,000. We're at 104,000 on the dot right now. Crude down 14 pennies. You see that spike to above 80? That spike a week ago today, and we're trading at 75.69, down 15 pennies in crude. Golds, now we got some dollar weakness, right? Let's jump to yields, the dollar, and then we'll get to gold. You jump over to the 10-year. We're at 4.56 early this morning. Looks like we're right near that area right now. So you got the 10-year sitting at about 4.56, okay? A little bit of higher price, lower yield from that spike of 107.06, but the real move yesterday was in the dollar. We're back above 108, but look at that pullback. We'll put it on a 15-minute, okay? You had the slide Monday, and remember that now we're below where we were on Monday. Okay, you hit 107.75, and I was up 6 a.m. this morning. We were at about 107.75. We're at 108 right now, but you take a look at that. That's a decisive move now. Great day. We're going to talk to our man Teddy Kegstad. We always do. 40 past the hour on Wednesdays. Check out that Tiger Forex report. If you haven't, folks, comes with a 30-day money-back guarantee. But we talked to him at 40 past the hour. We'll talk some dollar, man. Teddy said some great calls in that currency market, commodities. Interesting day, as always, it seems lately, to have him on as we digest some of this action. But that is a move, man. Okay, you are back to where we were November 22nd. It's January 22nd. Boom, 2 months just like that, taken back in the dollar. Okay, and if you see, what have we done? We've gotten above that area, but that was the first decisive move. As in, you traded from September 30th to November 22nd, and yeah, we had a little bit of a pullback coming into Halloween and the beginning of November, but it was a straight shot, and you almost did another straight shot to the upside. But now we're just like that, back to that first acceleration of November 22nd right now with the dollar at 108.11, and keep your eye on the dollar, man. because so much of what's going on, the market trying to decipher, whether you're talking about tariffs, the news out there talking about, to pull it up, right? I thought it was going to be there. 10% on China was the number I was going to say is out there, getting talked about today. Let's see if they throw it around up here. I was just reading it. Yeah, we'll talk about Netflix, that's for sure. There it is. Trump threatens 10% tariff on China. And yeah, no matter what he cites, right? Trade deficit with the EU. Any tariffs would be on top of existing levies of Chinese goods. And yeah, Canada and Mexico in the mix. So that news out there, but nonetheless, Netflix earnings. You talk about it, right? All right. Let me pull them up. So, I talked about it a little yesterday. It is remarkable in terms of how used to ads I already am on the Netflix pattern application. It was jarring the first time I was watching a Netflix show, binge watching, you're rolling from episode to episode, boom, an ad hits you. But guess what? Now it's normal deal. Standard plan without commercials is going to go from $15.49 to $17.99. Its cheaper ad-supported plan is going to go from $7 to $8, $6.99 to $7.99. So you want no ads? You're paying $17.99. You okay with ads? You're paying $7.99. For me, folks, is it worth $120 over the course of the year? Maybe it is. Depends what you do, right? Maybe it's worth that $120. For me, I'll watch a few extra ads and I'll end up with $120 extra in my pocket at the end of the year. And I think a lot of people are going to make that decision. And Netflix is going to be able to make more than $10 a month, especially if you're watching it to any degree that most are. The most costly is going up $2 as well, $22.99 to $24.99. So keep in mind, right? What are they doing? They're raising it $1.50 when you have the standard plan with no ads. They're raising it $2 at the top end. But if you're getting the cheap one and you're getting ads, you're still only paying less than $8 a month. Yeah. Yeah, and here's the number. It added 19 million paid memberships to surpass 300 million subscribers. So, and they talked about that they had already raised plans, different markets. It went smoothly, was the quote, I believe, on Netflix. And so they're bringing that price raise. And look at that. We're going to be above 1,000 on the open man, 1,001. And as I mentioned, Netflix, about a $70 move. So you got a $130 move. That's for options, man. You're going to get some big action on the open on an equity like that, trading at $1,000. How about that nice round number, right? Let's jump around to some of the other equities this morning. Amazon's been on a run, man. And it's going to continue. Last Thursday, you're at 220. You're at 232. You're up another almost $2 for Amazon shares this morning. You jump over to Microsoft. They're going to open by $8. How about that? Now, that is on the heels of the AI initiative. You had Oracle, right? OpenAI, which Microsoft has a huge investment in. And then you had Matsuyoshi-san, right? Is that his name? Nonetheless, an AI initiative, Microsoft in the mix of that. You're up by $8. You want to see some action? How about Mr. Ellison? News breaks yesterday. He's going to the White House. They say, oh, man, that must be good news. You're at 163. You're at 190. 190. As Oracle is in the mix there as well. We got a lot to talk about, folks. We're coming back in 3 minutes. Don't go away. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got the S&Ps up by 31 points. NASDAQ 100 up by 205 right now. And yeah, how about that Oracle chart? Up to 189 from 165 yesterday. Mr. Larry Ellison. And pulling up that story right now. So this is AI infrastructure. You all remember Infrastructure Week, right? This is AI Infrastructure Week. AI infrastructure investment backed by Oracle, OpenAI, and SoftBank. That was the term I was looking for. Masayoshi. I was close, yeah. But there are the three gentlemen. OpenAI, Oracle, SoftBank. SoftBank's son had already promised a 4-year, $100 billion investment. But yeah, you want to see some numbers, man? $500 billion. That's the one I was waiting for. The Stargate Project, new company which intends to invest $500 billion over the next 4 years building new AI infrastructure for OpenAI in the U.S. They're going to begin deploying $100 billion immediately, right? Whew. At the time, yeah, $500 billion, man. Just staggering to see that acceleration. You're talking about, I mean, Ellison's already up there, man. How many shares does he own of this? And we got 2.8 billion shares outstanding. You got a market cap of 534 billion. But the remarkable thing is, I mean, just round up to 3 billion. You just went from 160 prior to this news to 190, adding $30 to the share. That's a $90 billion add to market cap, and you're only at $540 billion. I mean, imagine, staggering. Imagine if you owned a company, drop off 3 zeros. You own a company worth $450 million. All of a sudden, it's worth $540 overnight. Pretty staggering. You look at the long-term chart of that, man. From $60, and you're going to open at $192. Now, keep your eye on that high at $198 on Oracle shares out there. That high, their last earnings. When you had a little bit of a pullback there, you pull back from that 198. This is a weekly chart we're looking at on a weekly basis, doing 76.3 million shares, but you're going to get quite a gap today. We're going to open on this now this is a weekly, so you're not going to gap on the weekly, but you put it on a daily, right? Just like we gapped away on the open, we're going to gap away and close it on the top. We're going to open above 190. You're going to open right into that red bar from December 9th. So, between that bar, the bar following, you're going to face a little resistance up here, bumping up against 198 when their last earnings didn't deliver. But there's nothing like government money to the tune of $500 billion. And I say it all the time, folks. I try and look forward to the earth, to the world, in Tommy's eyes, right? What's going to be the best thing for our country, our world in 10, 20, 30 years? Yeah, you got to spend a lot of money on AI, man. That's the deal right now. Generational opportunity, as many tech stocks put it. That's why they're plowing so much money into it. And yeah, the U.S. should be too. When you think about, right, the nuclear arms race, this is akin to that, man. You lose out on AI. We've all seen Terminator. We haven't. It's a little dated. But if you have, you lose out on OpenAI. You lose, period. That's the deal. So, yeah, $500 billion, those. These three companies. You got Oracle, going to be up $20 on the open. Microsoft going to be up another $7 on the open this morning. We jump over to Google shares. Trading slightly higher with the market. Google, a little bit of a give back yesterday, right? You opened at 203. We're trading at 200 right now. We jump over to Tesla shares. Tesla trading down about $9. Tesla, they've been facing some heat to the upside here. Tough to get a bid. Look at that drop off yesterday, right? We're coming into a positive market this morning, down by about $9 to $4.15 for Tesla shares. Procter & Gamble out with their numbers this morning. Strong numbers, up another $6. Check out this chart, man. Longer term. Yeah, that's the chart, right? Huge numbers. Let's pull that one off. And we'll pull up these numbers in a moment. Pretty cool, some of these old. And yeah, that's a pretty well-defined channel, man. Look at that. Where are we lying at the top? Something like that, maybe? So we're going to pop to about 167. Looking at this chart myself, man, that is a nice chart. You go from the lows that we had back in 2018. The COVID lows touched that area as well. We pull back on the deceleration in 2022. And since then, we've been bumping against this bottom trend line. And right now, we're going to get a lift. Where are we at? That's not it either. There it is. Shoppers buy more household staples. Now, I talked about this recently, right, in terms of myself. Where are you buying those staples, which is so interesting as well. The volume rose 1% in the fiscal second quarter. Demand for household staples like toilet paper and cleaning products rose. I was reading this morning. It's a tough one to wrap your brain around. That's something that really there's not much variability of how much toilet paper you're buying. You're probably buying how much you need, right? Probably one of the things that you're buying, however much you need, but nonetheless, it's going up. Net income, $4.63 billion in 90 days. Not bad. $1.88 a share, just over the number they're expecting. Revenue beats as well at 21.88, and as I mentioned, volume grew 1%. So that excludes pricing, right? Their volume of sales, more things sold, period. Not talking about prices. Yeah, and they've been struggling a bit, but the chart doesn't say it. Their healthcare segment was flat, which is Pepto and Oral-B. Fabric and home care divisions had that volume of 1%. That's talking about Tide, Swiffer, Cascade. Their grooming segment rose 2%, but nonetheless, they reiterate that forecast. They beat, and yeah, they've been on the rise, man. Put put that one on your radar, because that is quite a channel with Procter & Gamble opening up by about $5. We jump back to Netflix shares. They're going to open at $1,000, $9.97, and yeah, you jump to that last one I had here. New paid subscribers per year. And look at this, right? You're talking about, I mean, you got a declining number, but boy, these are big numbers, man. You're still crushing. 41.35 million they added in 2024. Yeah, they're crushing everybody else. Look at Paramount, Warner Brothers, even Disney. Netflix going to be pushing up 100% in the last 12 months, man. $27 million new subscribers annually over the past 5 years. We're coming back for the open, folks. Stay tuned. We'll be right back.
This market has turned red, Tigers, and the question we should be asking ourselves is how to position for a potential bear market. Plenty of gains can be made in bull markets, but if we've entered bearish territory, that strategy needs to change. So, how do we pivot so we can see green in the red? Join Larry this month, January 10th and 24th for live trading action. You'll sit next to Larry as he places live trades, explains his methodology, and answers questions live. Larry brings his decades of trading knowledge directly to you, teaching you how to navigate this shifting market. Go to the front page of TFNN.com today and secure your spot fast for live trading Fridays with Larry Pesavento. Happy New Year, Tigers. We'll see you January 10th and 24th. TFNN. Educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. You're looking at Netflix up by 13.5%, up $117 to $9.85. We do pull back from that 1,000-point mark, but boy, quite a day, man. Record high territory for Netflix shares this morning. On their strong beat, they'll be raising prices. NASDAQ 100 up 0.9%. up 199 points, 199 to 21,909. S&P's up by about 0.5% or 27 points in the green, 6112. And you got the Dow futures right now up 0.25%, up 113 points, 44,351. Let's jump in to some of the action. Oracle up 10% on AI. Gotta love it. Let's jump over to NVIDIA shares this morning, up by 2.5%. Also getting a bid yesterday. If you're investing in AI, you're investing in NVIDIA, man. Where else are you going to get a leg up on the competition than their products, NVIDIA shares? You jump over to Microsoft, higher by 2.1% or $9 in the green right now to $437. It is amusing. I found myself thinking yesterday, you talk about a sales job, as in, how is it just SoftBank, Oracle, and OpenAI? Now, those are remarkable names, of course, but there's other players in the market, man, right? And I'm sure they wish they were competing in terms of Google, just at where you opened yesterday. Compare that to Oracle, that's up 20% from where you opened yesterday. Much different companies, but you get the point, right? Why weren't they in the room? I'm sure they would have wanted to be. Amazon, nonetheless, Amazon up 0.75% or $1.78, $232.97. Yeah, I thought so. I was like, we're pushing all-time highs yet again. All-time high at 233 out there. And we're pushing all-time highs on Amazon shares, up another 0.75% to 232.39, man. Watch out for Amazon shares. Meta pushing all-time highs as well. Netflix pulls back a bit. You're going to get a $9.99 print. That's quite a number. Nice round number. All right. We got Teddy Cakestack coming up next segment. We check in on the dollar. Dollar at 108.15 right now. All right. And what else we got pulled up? Davos is going on. And let's talk a little JP Morgan. Jamie Dimon. Anecdotal, but always interesting when you got the CEO of the largest bank in the world and the country talking about that the stock market is quote-unquote kind of inflated. Now, he said some stuff like this in the past year, even as the market powered higher, right? Well, parts of the bond market, like sovereign debt, are at all-time high, So, yeah, they're elevated, and you need fairly good outcomes to justify those prices. Having pro-growth strategies helps make that happen, but there are negatives out there, and they can tend to surprise you. I love that quote, okay? He's just talking about, and this is what, this is the case. Now, you as a trader can make a decision in either direction. He's saying things are priced for the market to go pretty well. You better believe things are priced to go pretty well with where valuations are right now, right? Doesn't mean they're not going to go that way, but things tend to come out, and we have some volatility, and the next thing he talks about is tariffs, okay? And he's a bright guy, obviously. But I do enjoy the way he talks about these because, as I mentioned, right, I look out 10, 20, 30 years. Go even further than that because in 30 years, Tommy's only going to be 33. That's a young man. He's going to have many, many more years. What's the world going to be like in 40 years? In 40 years, he's not even going to be my age. That's tough for me to say, no. But it is remarkable, right? And what he says here is, it's a little inflationary, but it's good for national security, so be it. I mean, get over it. And that's, what I've been saying here. Okay, these tariffs. The debate should be focused around the fact that they might be something that's beneficial on a longer-term basis. You have to address the fact, though, of what they actually are. And that's where the conversation devolves, okay? And that they're taxes not on China, not on Mexico, not on Canada. They're taxes on businesses that bring those products in, and that will be inflationary, but the goal is to disincentivize bringing in cheap exports, period. And on a longer-term basis, that's probably a good thing. And you go from there. But that's called the middle. That's very difficult. So open up those brains on both sides, myself included, okay, and understand that's where the conversation and the nuance that takes place. And we're seeing it already. The market's reacting. We have a dollar at about 108, as in if the tariffs were coming, mean and green across the board on day one, they would have come. This is a negotiation. It's taken place. You're seeing it take place through the media, whether it's Trump talking about 25% on Mexico and Canada, whether it's talking about 10% additional in China right now. Ongoing negotiation to apply that pressure. All right. Look at this NASDAQ 100. Pops even higher on the open. We're pushing 22,000. Get your Dow 44,000 hat in place because we're there, and get your NASDAQ 100 22,000 hat in place, man. Yeah, we're only about, less than 2% away from all-time highs right now in the NASDAQ 100 futures. Remarkable. 21,946. And you back that up to where we were in the beginning of September. And I'm not even talking about the August 5th when we woke up yet. The yen rollover trade unwinding, right? Markets down limit. That was on Monday. Yeah, Monday, August 5th. I remember because we came in Monday morning. It's like, whoa, what happened over the weekend? Futures are down 5%. Well, you talk about buying the dip, man. You buy 18,000, boom, just like that. You add 4,200 points to the NASDAQ 100, and you had a second opportunity on September 6th. As we were at 18,003, we're pushing 22,000 in that NASDAQ 100. All right, we check in on gold. So gold, yeah, with dollar weakness, and I say weakness, we're still at 108. Gold's pushing all-time highs. You know, you are now within, we've retreated from those spikes of 27.74. You had the dollar index at 107.750. We've gotten back above 108, but remarkable strength in that gold contract with the dollar pushing the 108 price level. All right, we talked Mr. Diamond. We talked Netflix. What else we got out here? Yeah, and we talked the tariffs out there as we continue. And, you know, this one's going to get some headlines for sure. Don't quite understand it, but that's how it goes in politics sometimes. And you have the Silk Road creator, Ross Ulbricht. Now, this goes into all the depths of libertarian, right? It goes into the depths of Bitcoin and the economic freedom and lack of regulation that goes with it. And the one thing that I'll say is that, and I don't understand the fundamentals, folks, but there's more than just running an exchange here, okay? You had $250 million almost of illicit drugs, and you have potential attempted murders. Yeah, in the mix there. So there's a lot in play in crypto, as you are priced at some pretty lofty levels right now. You talk about price for everything going pretty well. I talked about it yesterday. Look at this move. We're sitting right at a 1-to-1 A to B, C to D. You make that move from 15,000, your first acceleration, up to the highs of about 70,000 in March of 24. You pull back, and then you do the same exact move. That was a $60,000 move from the beginning of the run to the highs of March of 24. You pull back, and what do? You pull back to a price of about 50 grand, and you accelerate exactly 60,000 again to 110. All right, folks, stay tuned. We're going to come back. We're going to talk some currencies with our man Teddy Kegstad. Check out that Tiger Forex report. We'll be right back in 3 minutes, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps up by about 0.5% or 28 points in the green at 61.12. And as we do every Wednesday at 40 past the hour, we're going to jump over to our man, Teddy Kegstad. Folks, you can check out Teddy's outstanding Tiger Forex report. He puts out new issues every Monday, weekly report, new issues Monday morning, updates throughout the week when warranted. Comes with a 30-day money-back guarantee, and it seems like we always got market action lately. Teddy Kegstad, good morning.
Good morning, Tommy. How are you?
I'm doing well. How about yourself?
It's nice and cold in Chicago. We got some about 2 inches of snow coming today.
You know, Teddy, I was going to ask you about how the weather was, because I know, and some of us know, man, I was just looking at pictures of the snow we have in Florida, and I said to myself, man, if it's snowing and it's cold in Florida, then what's it like in Chicago? But nonetheless, stay warm out there. We got some snow in Florida. Pretty remarkable. Where do we start in this market, Teddy? We're the market trying to decipher, what the new Trump administration looks like. We're getting headlines out there, of course. There's some posturing, but we got a little bit of a pullback in the dollar. Yield sitting, not too drastic of a move. But what's your general consensus as we've gotten a little bit of an indication of where things at least start for the new Trump administration?
Well, I like the pullback in oil. I think that's a good thing for as far as where the U.S. dollar-yen relationship may be going. Outside of that, I think we're going to be kind of sideways into the next Fed meeting. There's a lot of things that have to, just because a bunch of executive orders have been placed and the conversation is going, these things don't just happen overnight. So I think that we have a good perspective now on the way some trends are going to go. Okay, so and I'm looking forward to that. I think one of the key things is to see how the Fed reacts. And I think that obviously there's pressure on them to cut rates, but we'll have to see how the numbers come out. And we have some interesting things, like we have the, what is it coming out tomorrow? We have the CP. Oh, so we got jobless claims tomorrow. We got the CPI for Japan, which is a big number. So between the Bank of Japan, what they're pondering, the CPI for them and these relationships, I think the Fed is going to be watching all of these numbers, not just ours. And right now, it's really a hard, tough call. Before the last Fed meeting, even before the last couple Fed meetings, I had a really strong bias, if you will, as to what they may or may not do. And to be quite honest with you right now, I wouldn't say I'm scratching my head, but it's very, for the first time in a while, there's a vagueness as to how the Fed is going to be moving forward, if that makes any sense. Before Trump was inaugurated, they were saying that, 0.5 point this year is probably what they're going to do, and they had a little bit of transparency as far as their forecast for the future, but that's diminishing, and I think it's going to be really important to watch not what they say, but what they actually do in this next meeting.
Yeah, remarkable. That's a week from today, and a lot of focus on the tariff talk was February 1st, right? That first night, Trump was saying maybe February 1st. Interesting that that's on the flip side of that, as in not going to be a lot of resolution. So how do they handle that? And we see some of that action with volatility in the markets, though, for sure. You know, you referenced you like the action in crude in terms of how that relationship plays in for the yen and the U.S. dollar. And I know you've walked us through that so many times for countries that are producing, countries that are consuming. But for those listeners that haven't heard that, right? I think that was such a valuable lesson myself, and it ties in so well. Crude at 75. I just pulled up the yen. We got weakness. But could you walk through when you say that, right? So we have crude pulling back a little bit, and then how that plays into one of those currency pairs, as in the dollar yen, and the influence that sometimes those commodities have, whether you're a producer or consumer. Could you break that down? Because I love that one.
Sure. Sure. In fact, if you look at the U.S. dollar yen chart, or the way it is now on the daily, they spiked a little. They were buffering up against our critical resistance zone that we had in the Forex report. And we were talking about, is it topping out? And remember, that was when oil was still spiking high before the inauguration. Now, last week when we talked last Wednesday, that's when oil spiked up at around $82 a barrel. Now it's trading around 75. $7 slide in oil over the past week without any news or any global geopolitical reasons or whatever outside of an inauguration. That's a big deal. Now, what has happened to the U.S. dollar-yen relationship in that time? In that time period, we've been sideways to lower, so meaning that it's bearish pressure. So that's where we get the oil relationship with the U.S. dollar-yen. Okay, so just as the yields were pulling back, oil was coming back. Japan is an oil-dependent country. That's big for the currency relationship, because as far as how much oil they demand, as well as how many dollars they demand as far as purchasing, because they purchase in U.S. dollars. So they have to convert yen to dollars, okay, for one. And the more expensive it is, the more dollars they have to convert, okay? It's just simple mathematics, right? The more expensive oil is, the more dollars it's going to cost them. So now you're looking at a lower cost. Their margins will be better. Their cost of production is going to go down drastically over the next 6 to 12 months. And you got to think about that. That weighs in with the tariffs, okay? So think about this. If everything just stays neutral, okay, tariff or no tariff, any way that goes, that benefits Japan and the U.S. dollar-yen relationship as far as for the bears, meaning that even if there's a strong dollar, if crude weakens, like let's say we have a crude $20 lower 12 months from now, okay, just on a fundamental basis, that should pull back the U.S. dollar-yen, I would say, every bit of 10 to 12 handles, which means now you're trading at 156. You should be trading probably around 144 come the end of the year if you had that kind of a movement just in oil alone. Let's just say that yields stay in a range trade for the year. Let's say the Fed only cuts a half a point and they retrace maybe just slightly. That would be a little bit bearish for the U.S. dollar-yen relationship, but not necessarily too much. Okay, that could maybe get us down to around the 150, maybe 148 level. But to really get down towards the lower 140 handles, you would see that happen because of a big slide in the crude oil price because of the cost of production. And then you throw also lower yields, the cost of capital also goes down, the carry trades reduce. All these functions mean that it actually helps to drive the economic engine, which also is a forecaster for the U.S. dollar-yen relationship. So I would say that I'm not going to call a top in the U.S. dollar-yen right now, but it's very likely that the highs that we've seen probably over the past few weeks that we've been buffering off of, those may be the highs for probably 6 to 12 months. It could be. I mean, we may still have one more run up. It depends on yields. You have to watch. If we get a really big spike in yields, if bond and 10-year prices start to tank and hit the lows again, then we might see one more run up and may see a spike. But I can't see the U.S. dollar yen holding a relationship above 158 or 160 for very long. If it was to spike up there, I could see that, but then I would see it, as markets go in, they come out, and then you might see that as the top. But right now, I would say we may be seeing the top actually right now for the U.S. dollar yen if the fundamental relationship of crude oil and stuff, stays the same. Now, obviously, if crude oil goes back up to, the $80 level or higher, that would change things, and that would obviously accelerate the current uptrend in the U.S. dollar yen.
It's a great education, man. I love that. And it makes so much sense in terms of the fundamentals drive the market, right? In terms of commodities, what are you using your currencies for? But not a lot of people understand it. I appreciate it. Can you stay with us for one more segment, Teddy?
Sure.
All right, we'll come back. I want to get your take on a couple other things. We'll stay with Teddy, folks. We'll come right back. And, yeah, check out that dollar yen. I put that dollar yen, Teddy, going back to 1971. We'll talk about that when we get back to it. Stay tuned, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We're talking to our man, Teddy Kegstad. Don't forget to check out that Tiger Forex report right under the newsletters tab, folks. As I mentioned, $97 a month. It comes with a 30-day money-back guarantee, some great info in there. And Teddy, as I mentioned, just remarkable. When I pull up that dollar yen on Thinkorswim, it goes back to 1970. But, man, you're talking about levels that the only thing that we've seen weaker than this, right, is you got to go back to like 86. Is that right in the yen where we push in? And then that's a different era, of course, but pretty remarkable, those lofty levels, and
Sure.
anytime recently, not even near where that was from 75. Do you ever look at that type of action when you're looking at it? I mean, just from a longer-term basis, remarkable how you look at that chart. You know, anything in modern times, you could say, in terms of lofty levels for the yen.
Yeah, absolutely. When it comes to my, especially when I'm looking on a yearly basis, I definitely look at the long-term charts and also try and compare historically what was going on at the time. Now that's where sometimes we have, some big indifferences, if you will, depending on how far back in time you go.
Yeah.
And also policies. You got to remember that, especially with the U.S. dollar yen. It was last year that was the first time the Bank of Japan had made a move in over a decade. Right?
Remarkable, right?
So there's certain fundamentals that we talk about our Federal Reserve all the time. When it comes to the yen, we almost never talk about the Bank of Japan, right?
Yeah.
I mean, it's just now that's not the same when we talk about the euro or the pound. Those central banks could definitely have more activity than does the Bank of Japan. For sure. So, but yeah, I definitely do look at those relationships and also, look at where were like the commodities at that time too. Was there a spike or was there a bear or bull market going on there? Because there is a cyclicality to things without a doubt. So I do use the long-term perspective. But when it comes to once you start going out on a yearly, on a monthly chart going back decades and stuff like that, it starts to get a little bit harder on your relationship because certain currencies didn't exist.
So the world was a different place. No, totally, man, totally.
Right.
Teddy, thank you so much for the time, the education as always, man. I look forward to talking to you next week on Fed Day too.
Right. Take care, Tommy.
Take care, Teddy. Thanks, folks, for tuning in. Stay tuned. Basil Chapman, he's in the den. He's ready with the Tiger Technicians Hour next. And I'm actually going to be back this afternoon.